breaking news. The Indian markets have opened and they are trading in the red territory as again the trend continues following a slump in global markets. The Sensex has opened more than 500 points and 1.5% down below 34,000 points. Meanwhile, Nifty is also down by more than 150 points and 1.5%, trading below 10,420 points. Indian indices opened sharply lower on the back of weak global cues and correction in the US markets. So that's the latest. The trend continues. Benchmark indices, Sensex and Nifty both trading in the red territory. Sensex is down by more than 500 points. Is also trading in the red territory. In fact, this downward spiral is also unfolding in the global markets. The Wall Street is also down. Now, the Wall Street is also down. It's the worldwide phenomenon that's spiraling, and worldwide the stock markets are in the red territory. For more on this, I'm joined by WION's Sumit Chaturvedi, who will dissect what's happening in the stock markets. Good morning, Sumit. What's happening across the world from Wall Street to the Wall Street? All the benchmark indices are trading in the red.
Archana, clearly Indian markets have taken a cue from the falling global markets, and that's why they have opened sharply lower. Sensex and Nifty both have opened lower. Sensex is down more than 500 points. Clearly, the fall is because of the global markets, which have, like US and Asian markets, have come down between 2 to 5%. So it can be further further go downward from here. We can say that Sensex Nifty can fall further from these levels. Yesterday was a good day when they closed in green, but today is the 8th consecutive day when they have fallen and open in, we can say, that red, and they are expected to fall sharply lower further going forward.
Right. Sumit, for the benefit of our viewers, especially back home in India, at this point in time, what are the experts saying? What should the stock markets, investors do at this point in time? Because if we see the sell-off continues for this week as well, is it a safer bet to stay invested in the market or pull out?
Well, clearly, Archana, if you have certain good positions, you better stay back, because you don't know which way the market is going to go now. Second, if you have eyes on certain stocks, certain blue chip stocks, it's better to go out and shop. Big people like Anand Mahindra are also saying that they have to go out shopping for big stocks, because this correction was keenly awaited by market participants and experts. So this is the time when it's good to go for shopping as well, and rather it's good that everybody should go for shopping in stocks, and if you have good position, better hold them.
Right. Sumit, also, other than the Indian markets, please also give us more details about the global markets. We've seen FTSE going down. We've seen S&P 500 in the US and NASDAQ also. The Wall Street is also down. Then what about the Asian markets?
Well, Asian markets are also 2 to 5% down. Well, it's a global phenomena, and it starts from US. And as the proverb goes, that if US catches cold, the world sneezes. That's what we are seeing now. US is catching cold and the world is sneezing. That's what is happening. We all are so overly dependent on USA that whatever happens there, we can't be aloof from whatever is happening. Is it good or bad? So that's what has led to the crashing of both US and European market today morning. India cannot stay away from this kind of crash, and that's what has happened this morning as well.
All right. One last question, Sumit. How much of the budget is responsible for the Indian markets, which are tanking right now? Remember that long-term capital gain tax that was introduced in the budget. How are the experts viewing that development? Is it still responsible why our stock markets are plummeting by the day?
Archana, this is just a misconception. That hasn't happened because of the budget at all. LTCG was introduced. It hasn't impacted markets much at all. The long-term capital gains, in fact, actually, participants are saying that is good for the market, and that is not the reason, clearly. Global cues are the reasons why markets are crashing day by day.